Hello everyone and welcome to my morning report and analysis videos on Tuesday the 5th of June with me, Richard Perry, market analyst at Hantec Markets. Interesting moves on markets today. There's a bit of a consolidation we've got going on. We've seen that the dollar's just sort of stalled in its decline as these markets have just started to sort of take account of the fact that the risk appetite improvement that we've seen over the course of sort of the last few days is just sort of taking a bit of a pause for thought. And you can see that on these forex majors where there's very little real move that we're seeing. Very slight sort of very slight underperformance of the dollar, but only very marginal. And what we have seen is the dollar just basically moving sideways. Now that comes as the treasury yields have just sort of ticked a slight amount lower today. Nothing too drastic at all. 10-year back at sort of 292, 293. But yeah, nothing too significant. Now this is interesting. This oil chart here, WTI has broken its long uptrend of about 9 months. That uptrend has been in process and it's breaking that uptrend now. So having broken down, sharp decline in the last few days and on WTI. But look at Brent crude, nowhere near breaking that uptrend as it has done on WTI. And you can see, look at that. I sort of saw a glimpse of the chart earlier, but this is the spread between WTI and Brent crude. And it's at multi-year, three odd year levels. Well, what does that mean? I suppose it would suggest that at some stage there's going to be a retracement of that spread. Is likely, which currently stands at over $10. It hasn't been over $10 since March 2015. So yeah, it could well have a sort of closing of that gap at some stage soon. But generally speaking, what we've seen is just a rather sort of settled look, and that is despite the fact that Wall Street broke out last night. S&P 500 breaking out above those May highs on a closing basis as well. So that does sort of point towards an improvement in sentiment, certainly across equities, still sort of playing out, and this sort of could that breakout on the S&P 500, for example, opens 2,800 again. So where does that leave us in terms of data points today? We've got the services PMIs throughout the day. We've had the Eurozone, which came in basically in line with expectations. On the very slight miss on the services PMI, but the composite PMI was in line at 54.1 on Reuters. We've got the UK PMI at 9:30, expected to improve very marginally to 53, and then this afternoon the US ISM non-manufacturing PMI at expected to improve to 57.5, and jobs openings expected to just slip slightly to 6.4 million. But my chart today is the Kiwi dollar, which I think is an improving chart, and it has sort of turned a corner. Now, what we have seen is this this selling pressure that we saw throughout April into the first half of May has sort of settled down in the last few weeks. And last week we saw a big bullish engulfing candle that saw the market burst through resistance at 69.75, and now sort of suggests that we're posting a higher low and higher highs. And that breakout above 69.75 now has become a basis of a pivot, a near-term pivot. Another strong bull candle yesterday took us up to test the next resistance at 70.50. Just shied away from 70.50, but if you get a closing breakout above that, that would certainly open the next resistance above that, which is 70.95. But it really does look as though the market is sort of gathering momentum for a retracement back towards 71.50, which is that old range breakdown level of support, that old support which becomes new resistance. And you look at the momentum indicators, the RSI, having previously been sort of up around the 60s level, between 40 and 60 throughout that consolidation, is now sort of regathering itself again. 55 at the moment, so there is upside potential back towards 60 into the low 60s. MACD lines accelerating higher, still to unwind back towards neutral. Stochastics are in positive and arguably strong configuration as well. So this is a a momentum rally that is continuing, and little corrections are being bought into. You can see that today. 70.16 there's basically a pivot, isn't there, around that sort of 70.20 area. Those old highs from last week now becoming supportive. So it certainly looks as though the market is gathering for the next move higher. And again, it looks like that old high of 69.60 that we saw previously in the end of May has become supportive. So the old resistance levels are becoming supportive now on the Kiwi dollar. So that is interesting, and you've got strong configuration on the hourly momentum as well. So it's looking pretty good for a continued recovery on the Kiwi dollar. So with that in mind, I wish you good luck in your trading, and I will speak to you later.